Hello and welcome to Wyckoff Training Academy. And this is a web series which we are taking since a long time. So actually, this was planned on Saturday, but due to some reason, we could not conduct this session. The topic of this session is study of Wyckoff accumulation and distribution schematic. The reason for doing this session is I have developed a indicator which helps in identifying and which cater to the problem faced by many traders while identifying accumulation and distribution schematic. So I'll address to some certain issues which are faced while identifying accumulation and distribution when it's come to the schematic. So this is my name, Quadris and I'm an MBA and MLS professional. My basic qualification is computer science, BSc computer science, and I'm a Wyckoff methodology expert, technical analyst. I'm doing trading and I'm into training and development since more than 15 years. This is my WhatsApp number and my Telegram ID. If anyone has any doubt or any things to ask, they can drop me a message either on my WhatsApp number or on my Telegram number. So let's start with the presentation. I'll try to keep it shorter, like I'll try to cover within 30 minutes. But this subject requires more time and more explanation. But I'll try my level best to deliver the basic concepts which are normally looked into, like when we identify our distribution risk accumulation in a very simpler and a layman language. So let's start. Always remember, Wyckoff method revolves around three laws: law of supply and demand, law of cause and effect, law of effort versus result. So in this particular, the indicator which we are going to discuss, it revolves and it works based on effort versus result. So let's dive into more details. This is a market cycle defined by Wyckoff: accumulation area, markup area, distribution, then after that markdown. So in markup, demand would be greater, supply would be less. In the markdown, which is normally termed as downtrend, supply would be greater compared to demand. And in a markup, which is normally commonly called among traders of this generation, is a uptrend. So accumulation is just like when institutional investors or composite operator, smart money, they keep accumulating the stocks and they keep accumulating the stocks and they stop the price to fall further. And that's the reason, the main intention behind that is they want the price to go upwards, and based on that one, after reaching their objective, they start the distribution sell off and they book the profit in this duration. After that, when we come up to distribution area, which is a liquidating point for institutional investors or composite operator or smart money, they start distributing it, they start liquidating the stock, and following their footstep, retail traders, they also start short selling the stock. So this is a phase of distribution and there is a phase of accumulation. So today we are going to, like, I'll give you brief insights about accumulation and distribution. What are the phases and how they occur, and what practical difficulty a trader in who's trying to find distribution and accumulation zones, what problem exactly do they face in today's era. So having said that, let's come down to schematic. This is a schematic of accumulation. Phase A, phase B, phase C, phase D, phase E, and there are some new addition, phase F also. So what is phase A? Phase A, when there is established downtrend. Established downtrend means when there is a price following downward movement since a certain period of time, and it is evident and anybody can identify it, anybody can see it, and he'll be in a position to recognize this is a established downtrend. Somebody say the established downtrend means when we see more than 3 legs or 4 legs of downward movement, but I don't go by that theory. Established downtrend means when there is a price depreciation since certain period of time. So once we are in phase A, what is the first thing which we identify is preliminary supply or preliminary buying, which is followed by selling climax. There would be a pullback towards upside, and which would be much more bigger than other respective corrections. So this is a preliminary buying, it has to be PV. This is not my schematic, it's the schematic of Wyckoff. I tried my level best to get the original versions. So After the selling climax, when we see a automatic rally or automatic reaction, some call it as automatic reaction, some call it as automatic rally. After a sharp fall from the point of preliminary buying, we see sharp fall of prices, and the reaction which occurred after this selling climax, that is called as automatic reaction or rally. So by this point, we confirm that we are into phase 1 or phase A. So now, after getting into phase A, we start drawing levels from this point and a support level, a resistance level from this point. This is a normal practice which has been done by many traders. Once again, let me change the color of the pen. This would be resistance, and they will start draw a support line across this one. So whatever price action take place in between this level and this level is of uttermost importance, because this defines here cause is building. Remember the second law, before effort versus result, cause and effect, law of cause and effect, and demand has been generated or has been accumulated over here. So how do people identify? Let me get rid of this one. So in this one, there would be a sequence or a series of tests taking place. One second, let me see. Let me adjust the pen because I'm facing difficulty over here. Beg your pardon. So now, once we have drawn a support line, a resistance line, whatever price action is taking place over here, that defines our phase B, that is accumulation. To identify this one, people normally look for secondary test. Secondary test means they are testing this selling climax bottom or the low made by selling climax, which forms a support line, a support level. So when this appears, price will go upwards. It will sometime violate this one, automatic reaction or rally high, and after that it will come back and it will come near to this selling climax area. And this testing defines that we are in phase B. And there can be 1, 2, 3, 4, 5 tests, depends. Once we are in this phase B, as soon as we go for a spring, it is at that particular point phase C is identified. So phase A is identified based on automatic reaction. Phase B, that is accumulation, is identified. This entire process is of accumulation, and this entire accumulation process is dissected into 5 phases. So rejection of price on either side gives us a fair idea that we are going through some sort of activity wherein strong hands are exchanging either from demand to supply or from supply to demand. So after this spring, not always, but sometimes there would be a test of the spring. This is a test of the spring, but eventually we are testing selling climax low. So this is the entire testing, and spring itself is a test. It checks whether there are a smart money interest or retail traders interest to take this market down. So after this test, after the spring, there would be a test, and we would see acceleration of price towards the resistance, which is the high of automatic rally or automatic reaction, whatever you name it. After that, we will see a breakout. Then there would be a pullback, which would act as a last point of support. So here is a catch. Sometimes it might be on the automatic rally, the line drawn across automatic reaction or rally high, it will be exactly on that particular line. But sometimes I have seen it is coming a little bit deep and then moving upwards. So this can also be called as LPS, last point of supply. So this is nothing but they are testing the waters before a market is to go upwards. It has a habit to test the water. So this is the first LPS, and then after this LPS we would see price acceleration with strong candles or bars and closing on the higher sides, and no weak bars or no down bars. All bars would be, maximum number of bars would be closing on their highs and showing the commitment that price is about to go upwards. So that is what a sign of strength is referred to. Then we have a pullback, and then this pullback is the last. For me, this is the last LPS, but in some schematic, they consider second pullback also as an last point of supply. And after that, price it moves with a high acceleration, like widespread candles. You might also see gap up openings. So this is how this entire accumulation has been understood and identified and implemented. The key take home things from this accumulation thing is like the number of tests after this selling climax, because we are extending the boundaries across selling climax and automatic rally or reaction. I've seen certain traders, some professional traders, drawing the resistance level after preliminary buying. So this is how this is done. And when Wyckoff used to do this, he also used to do like this. You might be, if you have seen moving average, you can see that it's giving a feel of moving average. So many people, they use moving average to identify whether we are in an accumulation or distribution or a reaccumulation or distribution. So this is the in entirety the main idea, the logic and the main intention behind identifying accumulation is when smart money is exchanging supply to demand. That means they are selling off, or we are selling off things, and smart money is buying it. And after buying, they will gut check it, or they will check it in form of secondary test. And after the secondary test, when they are like confident and satisfied that prices are not willing to go downwards, at this particular point, they keep on adding the trades on every pullback and so on. So this is how an uptrend starts. So whenever you find or whenever you see any uptrend, price rising above this, after watching this lecture or this presentation, you would be in a position to look what has happened in recent past. Was there any accumulation taking place? I'm not fan of phase analysis, though I practiced it a lot. But for me, what I have understood out of Wyckoff accumulation concept is when you just have to understand is supply is changing its hands with demand, or demand is changing its hands with supply. So you have to identify those signs of the exchange taking place between supply and demand. So the purpose behind this entire activity is to just identify exchange of hands between supply and demand and supply. This is the second example, some kind of a new schematic with rising bottom. Things are same, preliminary buying, automatic rally. Preliminary buying is followed by selling climax, automatic rally. This makes phase A. Then resistance, support, testing. Here it has considered as testing, but there is no whatsoever spring to identify phase C and phase D. But here they have used creek analogy, which is a very common thing and common teaching, but it's not like it was not devised by our Wyckoff. There were certain, like I think Bob, I don't remember exactly, but I think it was Bob who came up with this theory of jump across the creek. So some Boy Scout kind of a theory. So I'll not get into that one, but this is a creek. Creek means we are standing near the creek, and there are certain few like two boys who are standing here, and they just want to cross it. So they're looking for the best possible opportunity where they can jump across this particular creek and come to the dry land. So this is lifting of bottoms taking place, and one thing which is common in this one is we are having LPS, which is a pullback towards or resistance form across automatic rally or automatic reaction. So this is something which is considered while observing accumulation phases. So now in previous example, we have seen one two test towards the support, and in phase C, we had seen a spring and then a test. So if you go by these two schematic, there are variation, and these are the variations which creates problem for a trader, because normal trader, they have a habit to go by the, one second, normal traders, they have a habit to go by the rule or go by the things which are written in the book or which are explained in the schematic, or so they have a habit of going through that. Notes and books. Again, we have a LPS. This is sign of strength in accordance with this creek, like two boys, they jump across this creek, and it is, this jump would be with high acceleration of price and high momentum. So this is accumulation. Now this is distribution. I'm going slowly. I'm speaking slowly because there are certain international traders who use YouTube translator for listening to the video, because they are not well versed with English. So that's the reason I'm speaking very slowly and in a slow. I'm going in a very slow pace. So please bear with me. So this is phase A. This is preliminary supply. Preliminary supply. Buying climax. Line has been drawn across this one. After this buying climax, there would be an automatic rally or reaction. This would be with high momentum and widespread bars, and a line should be drawn across this one. This is a test. Price coming near to this level. This is up thrust and a test. Again, we are coming back to this level. Here also we are testing again, testing again. So two tests at the bottom, two tests at the top, and this is the third test. Now, after the third test, there is a price acceleration taking place, and price movement is downwards. And as we are approaching upwards, there is sluggish movement of price towards the buying climax area, and there we can see this is your buying climax area. This was your secondary test, and this is your upthrust after distribution. This is the distribution taking place, and after this there is an upthrust after distribution. Then there is a test of the distribution of UTAD, or upthrust after distribution. Then there would be high acceleration price fall. Then there would be a sluggish pullback or a weak pullback, to say, that would act as a last point of supply, or LPS, last point of support, whatever you want to call it as. The naming is not important till the time you're understanding what is intended behind this one. So that is good for you. But when we go to a distribution, when we there in distribution, This last point of supply occurred on the automatic rally kind of thing. This was the LPS, last point of support. This is last point of support, and then price went downwards. This is again, they have incorporated a ICE theory, jumping through the, falling through the FTI, falling through the ICE. It's also an analogy, like Bob or some other guys, they came up with this one, who have taken over the working of Wyckoff. So this is falling through the ice, and price started depreciating. So I think it's already 30 minutes video. This is the last thing which I want to live slide. This is by Roman and Hank Pruden. So Henry Pruden, and these are the people who are from Wyckoff Analytics. They are very excellent traders and trainers. So though they purely work on schematics and all this stuff. They run, they are into Golden Gate University also, and they have a very great level of contribution towards Wyckoff. So I appreciate, and I have interacted with them also. But I'm not following this thing. Why? Because in my second part I'll explain it to you why we face, being a practical trader since 15-16 years, this thing is quite difficult to apply on chart. Same preliminary selling, supply, buying climax, automatic reaction, secondary test, upthrust in phase B, sign of weakness, last point of supply, last point of supply, last point of supply, sign of weakness. So they have only phase A, B, no C. Whereas in other last schematic we have seen, there has to be a upthrust after the distribution taking place in phase B. So this has to be phase C, and LPS occurs in a phase E or phase D, or end of the D, or in phase E. So this is what a practical in practical way a trader faces this problem. So in my second session, I'll try to give some insights into how I cope up with the problems and developed my own system to get supply and demand exchanging hands in a better and a simpler way, so that easily and every trader can identify it and take benefit of it. So I would be uploading second video after this one. So thanks a lot for watching the video. And if you have any doubts and questions, you have my number in the one second, let me pertaining to any topic, you can just drop me a message. This is my WhatsApp number and this is my Telegram ID. So thanks for watching the video.